Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin with a story dominating much of the news cycle, tariffs. Today, President Trump seemed to be sending mixed signals when it comes to levies on European goods. He said there's still room for trade talks with the EU, but Trump also insisted the letters he recently sent outlining new tariff rates are final. Well, markets seem to look past the rhetoric. U.S. equities pushed higher. And in a moment, we'll look at the tariff story from the Asian perspective and part of our conversation with the CEO of Mizuho, Masahiro Kihara. But we begin here in the States. Joining me now is Carol Schleif. She is the Chief Market Strategist at BMO Private Wealth. Carol is on the line from Chicago. Good of you to make time to chat with me. Can we look ahead to the earnings that we're expecting this week from the big banks? I'm curious as to what you're expecting.
Expecting good earnings because you actually saw it in the first quarter already. You saw trading volumes doing very well. You've seen M&A pick up. We'll be listening closely too for the commentary around the health of the consumer. And I think there's a lot of great data coming out this week, and having the banks kick things off will be really interesting to watch that. But you've also got loosened capital requirements. So you've basically got a lot of money burning holes in big bank pockets, and I'll want to listen to and see how they're intending to use that.
What about the trading revenue side of the equation? Given a lot of the market volatility that we had in Q2, I would imagine that some of these results will be pretty robust.
Yeah, I would think that because we saw surprises already in the first quarter, and that was before the April 2nd and all of the subsequent trading. And when you think through, if you remember back to that time, there was one point in time where we went down 5% to up 5%, all based on rumor, and take away the rumor all in the same day. And that trading revenue will all come into this quarter.
So I mentioned the tariff story a moment ago. Tomorrow we get CPI here in the U.S. And the big question is whether or not we're going to begin to see evidence that companies are passing along those higher cost of imported goods, merchandise associated with the tariffs. Would that be your expectation?
I would think we're going to see it more in the PPI than the CPI at this point. And we might be a quarter or two, or not necessarily a quarter or two, we might be a month or two away from seeing it creep through into the CPI, because you've got, in a big way, because you've had a lot of companies they brought it over, they hoarded it, they've absorbed it pretty well, but that's wearing pretty thin. And so as opposed to looking to the aggregate numbers for it, I think we'll be looking over the next couple of weeks and listening really closely to what the companies are all saying, particularly the consumer goods companies, and how they're able to either absorb it or pass it on.
There was some new research today coming out of 22V research about what investor expectations are for the average effective tariff rate when the dust settles. That number is 17%. That seems pretty high. Would that cause you to kind of take a closer look at a lot of the holdings that you have on the equity side?
Not necessarily a closer look, but we think it's pretty absorbable, and markets may not be quite that high. They might be more like 12 or 13%. But, it's important that we don't lose sight, because I know the administration is very positive about, look at all the tariff revenues that are coming in. And it's important we not lose sight that those tariff revenues are coming out of either consumer or business pockets in the United States. And sooner or later, that's going to wear away at the margins, even if it's in slightly slower growth or moderately slower growth. I think the issue would be the market is not prepared for broader sectoral tariffs, and we have a shot at getting some of those. I think maybe there's partial expectation too that the longer we push out these full country tariffs, the likelier we are to see some sort of legal overturning, because the testimony in that case starts in, I think it's July 31st.
So I'm wondering whether the uncertainty around tariffs and the impact in terms of the inflationary impact or the inflationary pressure that these tariffs may create really keeps the Fed on the sidelines for perhaps longer than a period that would take us through September.
Our expectation is still in September, and you may see enough continued wear and tear on the economy by then that the Fed feels compelled to go ahead and move, because they're not necessarily going to wait for hard data to come through. And by the time we get to September, you'll have a couple more CPI prints, a couple more PPI prints. You'll have some data for the Fed to start looking at. And we do think you'll see a continued deceleration, if you will. We don't think it's recessionary, but we do think that you're impacting the strong growth we came into January with.
I want to focus a little bit, if we can, on one industry in particular, artificial intelligence. Today, Mark Zuckerberg said that Meta is going to be building massive data centers to power AI. Elon Musk saying that Tesla shareholders will be voting soon on whether to invest in Musk's startup XAI. And tomorrow in Pennsylvania, President Trump will be announcing a $70 billion investment package that will focus not only on AI, but energy generation as well. Are you still playing this? And if so, how is that unfolding in your portfolio?
I think it's hard not to play it, if you will, in terms of, just owning a plain old index fund in any of the technology names, and you're at least market weighted, if not overweighted in that play. And yeah, we do think the combination of that and some of the more pro-growth, pro-business friendly aspects of the One Big Beautiful Bill that was passed last week or the week before, those things do put some nice support underneath. So that's one of the reasons why we're not out there with a massive recessionary call. And that could help surprise relative to employment too, because you've got tighter labor markets in there. And if you get some support where companies are hiring again because they need to hire for construction workers, they're going to need to pay those workers a little more than they historically have, if you will. We're going to put up those data centers, leverage AI across a variety of industries. And we don't think it's close to the final innings. It's definitely in the early innings still in terms of the build out there, in much the same way as you're probably in the mid 90s, not the late 90s, when we were building out the infrastructure for the internet to begin with.
The other thing that's happened under the Trump administration is this embracing of cryptocurrencies. House Republicans have declared this week as Crypto Week. We've got 3 bills on the agenda on the House side. Maybe a regulatory framework begins to emerge, and maybe some institutional investor appetite begins to occur around crypto. And as I'm speaking to you, Carol, Bitcoin is above 120,000, which is hard to believe, because when President Trump was elected to his second term, I think Bitcoin was under 70,000. So this has been a pretty phenomenal run, and I'm curious as to how you're feeling about it.
It's interesting. It's something we've watched. It still feels like it's in the speculative zone, pieces of it, but building out the infrastructure of it, watching it play, having a regulatory framework of it will help. And I think we need to pick a handful of industries that we want to make sure we stay at the forefront of, and, trying to bring some battery technology back, whether it's restarting some of the nuclear energy, because it's one thing, all of this stuff is going to take energy on the grid, and we're not going to get there just by pumping oil and drilling coal. Okay,
Carol, we'll leave it there. Thank you so very much. Carol Schleif, she is the Chief Market Strategist at BMO Private Wealth, joining us here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. The CEO of Japan's third largest bank says the U.S. will continue to be an important trading partner for Japan, even with tariff uncertainty. Still, Mizuho CEO Masahiro Kihara says Japan will need to diversify away from its second biggest trading partner. Kihara spoke with Bloomberg's Francine Lacqua in London. Here is part of their conversation.
Mr. Kihara, thank you so much for speaking to us here at Bloomberg. Now, how confident are you about reaching the 1 trillion yen profit within a few years, given all of the global uncertainty and given what we heard on tariffs and trade?
Thank you very much for having me. In fact, I think from a current earning profile, I think we have almost reached 1 trillion yen, actually. We had last year we had 880 billion. We took one-time losses somewhere around 120 billion, actually. So I think in reality, we reached 1 trillion. Thanks for all the, circumstances. Yeah.
But what does the uncertainty do? The uncertainty surrounding some of the Trump policies and trade and tariffs?
Yes. So before April 2nd, we were aiming somewhere around 1.1 trillion yen for this year, actually. However, because of all the uncertainties, we sort of shrink it down as a conservative base to 950 billion yen. Mm-hmm. But I think, when things get certain, the corporate action will come back, which means that we can ratchet up a little bit, our guidance.
So where are you seeing that uncertainty play into right now? Is it loans? Is it chief executives not spending, not deploying cash?
Yes. Right now, the CEOs are very, very on the sidelines, actually. But for example, if it is a domestic deal, even in each region, if it is a domestic deal, things are happening, which means that we don't see a lot of cross-border happening right now. All of them we have a big chunk of pipeline, but they're not executed. But from a domestically perspective, people are moving a little bit. So I think, there is a good chance that people will get confident at some point.
You've also built up a U.S. investment bank, basically franchise. Mm-hmm. How's that going?
So we started from building debt capital markets by ourselves. We went to equity capital markets. M&A was missing for us, but we purchased Greenhill. And I think at this moment, we have the necessary pieces on the ground, actually. So I'm very, very looking forward to see the synergies between our former Mizuho platform and the Greenhill platform to materialize, actually.
But do you plan to take the model of the successful investment bank that you built and actually apply it elsewhere, including in Asia?
Yes. So we would like to sort of use our U.S. capabilities, transplant it to Europe, Asia, and so that also even in Japan, so that there will be cross-regional collaboration between our regions, and so that I think that will bring our next growth, actually.
How much of your growth will be organic, and how much will be through mergers and acquisitions?
From now on, I think we did the Greenhill deal. It's very important that we make sure that the synergies will be built out. And for us, the next growth will basically be organic.
Okay, because you said in the past that you weren't used to, or you didn't want to, for example, interested in buying some, traditional commercial banks with a physical branch network. So that's still the case.
That's still the case.
That's still the case. But how do you see Mizuho changing, actually, in the next 4 to 5 years?
Yeah, so, I mean, there are a couple of areas that should be interesting for us. Just as I said, investment banking, regional collaboration, that will bring a lot of synergies inside our institution. Also, as you may know, asset management, wealth management is growing in Japan, and this will be another area. And also, one more area that will be very interesting will be Japanese mid-caps, actually.
Okay.
So the mid-caps are keen to grow, or if they cannot grow, they might delist. And there are many corporate actions happening in that space. So I think this will be another interesting area for us.
Is competition very fierce in wealth management?
Yes, it is very high competitive, but I think the thing is that the overall market is growing, and that is beneficial for all of the banks, I think. Yeah.
And on the mid-cap, is there something specific? Will it be basically lending that they need, or all services as they grow?
There will be advisory, and also lending, so both.
How do you see the Japanese landscape for businesses changing? How much will they look? I mean, Japan has been a great experiment, right, in terms of financials for a long time.
Yes.
Is it companies that will then grow also abroad as the economy stabilizes?
I would say that if right now there's many uncertainties, but I think as things get clearer, the corporate action will come back. These couple of years, we have seen many corporate actions happening, investing outside Japan, changing their business portfolio mix, selling parts of the business that they are not doing well, so concentrating the areas that have strengths. So I would say that once things get clearer, corporate action will come back. And many Japanese corporates will try to invest in outside of Japan too.
Are you confident in the Japanese economy overall?
Overall, I think we still have strengths in the economy sectors that we have. So I think overall, I am very confident in that. The thing is that we have to concentrate our resources in the area that we have strengths. We have high quality manufacturing, high quality products. So I think we need to figure out where the strengths are and try to sell it to the world.
Do you worry, or are there dangers actually to Japan given the spike in long-term interest rates?
Yes. So 20 years. So for the long end, especially 20 years, 30 years, there has been spike and there has been volatility. But I think the government said that they will try to shift the issuance to a 10 years or below. I think the BOJ is a little bit shrinking its QT, and I think that will help.
But is there a point where it actually starts hurting your business and starts hurting the real economy?
Well, I think BOJ is saying that the neutral rate is somewhere around 1% to 1.5%. And on top of that, 10 years will be somewhere around 2 to 2.25% then. I think that's the level that is okay. But if it goes beyond to 3% or so, that will then hurt the budget, I think.
Are you expecting more turmoil in yen, but also in the bond markets?
Not at this moment, actually. I think the current level of 1.4, 1.5 for 10 years is very. It's okay, I think. And we have. I haven't seen any turmoil in the 10-year zone. So as long as the 10-year is fine, I think it's fine.
That is Masahiro Kihara, the CEO of Mizuho, speaking with Bloomberg's Francine Lacqua here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.